What's up? Good morning. Good morning. What's going on? Welcome to the usual the usual pregame. Okay, as we always do. Come and hang out for a while before we actually get started. And markets look. I don't know. Looks like a lot of trouble brewing to me, but we'll see. Back for more. You're a glutton for punishment. To me, it looks like markets want to break down, and certainly that would fit in well with the overall economy. I mean, the overall economy is in, I would say pretty sad shape. But again, listen, we don't predict. We play the price action in our trading, and in our hedging, it's all automatic. So there's nothing to really think about. I mean, hedging's been phenomenal. Okay. But obviously the news is not so good. Now we don't trade the news. Why? Because trading the news is a losing proposition. We had a jobs number yesterday, which was all bullshit anyways. The jobs that they say they created were basically replacements from when COVID, number one. Number two, a big percentage were people that are working more than one job. Okay, because they can't make ends meet. Okay, on two jobs. I mean, the one job isn't enough for them, and that, again, those are problems that exist. We can't wave a magic wand and correct all of the crap that we have created. Okay, again, This is not a political statement. This is just a matter of fact. Okay. But we cannot wave a magic wand and make the trouble go away. Okay. We have troubles. There are problems that we unfortunately have answers to. We just don't want to answer the question. Okay. But this inflation is laughable. Okay. And unfortunately, it is for no particular reason, which makes it even sadder. Okay, is that we shouldn't be in the position that we're in. Okay, I mean it's kind of a sad state of affairs, because we really should not be in this issue, in these problems, but unfortunately, we have an administration now that doesn't mind the problems. They I think welcome the problems, which again is not so good for the average guy or gal out there. We can see the obvious problems. Okay, and certainly, how do we correct them? Well, we go back to fracking and shale producing, and suddenly these problems wouldn't be so bad. Okay. We could certainly get rid of them in a heartbeat if we chose. And of course, if you bring the cost of fuel down, okay, then what do you have? Well, then you have the ability to lower the inflation, lower the cost, and make it more appetizing for the average American. And when you weigh in with what else? Well, you've got you're gonna have a food shortage. Okay, make no mistake. Okay, you cannot ignore the fact that there's not going to be enough production. Okay, and when you take Russia and Ukraine out of the equation, which for now you have to take them out of the equation, okay, suddenly it means, well, where are we going to get the food from? Okay, it's not going to magically appear. There's not a magic box for food to show up. You don't have enough production. You're going to be way short on supply, and we've got a major drought in this country. Okay, it's amazing how we don't hear about it. But that's a direct effect on food and production for grains. Okay. So, all the soft commodity, everything that take, it's amazing how much water we use. And of course, there's an answer for that too, but that's farther down the road, and it's been around for a long time, but for whatever reason, we don't want to desalinate. Okay, because certainly salt water can be turned into fresh water pretty easily. Okay. So, again, at the end of the day, you would think at least for the farming community, they would do that. Okay. Now, I'm not blaming, I will put blame for this administration and what I believe is directly their fault, which is oil. Okay. I can't blame them for the drought. Okay. Again, I don't blame for everything. I don't. I'm really a center guy. I'm not a left or right guy. Okay. So, it's but again, you have a problem, okay, that is easily solved that we don't want to solve. So what do we do? Well, again, it becomes a problem. If you don't want to solve it, then there's not a lot that we get to do about it. Okay, but suffer. And of course, I guess they believe that the pollution is less if you ship oil from Saudi Arabia to here versus getting our own, which is incorrect because the carbon footprint wouldn't change one iota. But again, that is exactly what we have going on, which again, it's amazing, but how markets have actually held up as well as they have. Okay. And this is why I always warn you that the economy and the markets are not always linked together. Okay. They're not always linked in the same direction because, things happen, things change, and we have to be aware and prepared for all that. Okay. But when you look at the charts now, again, you can look at these charts in a number of different ways. You can say, well, they don't look so bad. They're in just wide sweeping consolidation, which would not be incorrect. Okay. Or you could say, there's big problems. Well, again, either is correct. Okay. Neither is the wrong decision or answer. It depends on how you want to interpret it. Okay. Because certainly we would assume that at some point shortly here, probably next couple of days, there will probably be a little bit of a rally. Okay. Again, not because I'm bullish, not for only one reason, because the markets are probably a little bit oversold. Okay. And listen, that happens. It happens all the time. They get overbought, they get oversold. Okay. At the end of the day, it really doesn't matter. Okay. At the end of the day, they will pick a trend, pick a direction, and they will extend. Now it's been really quite a while since we've had any major extension in any market. I mean, go back here. You can go back to April, and in April we've only been really trading back and forth in a 10% range. Okay. Now, what does that mean in the big picture? What it means that we're really not getting either a solid up or downtrend that has any time or extension to it. It's just a matter of the markets continuing to churn. Okay, really rotating around the mean. Okay, now certainly, obviously, and the hedgers know this the best, that the ones who are already hedged, it's been a big benefit, this kind of action. It's given you lots of opportunities to accumulate more stock. And, but at the end of the day, okay, eventually the markets will pick a direction and they will extend. And I do believe the next extension, in my opinion, again, this is an opinion, this is not fact. But in my opinion, the next extension will be down. Okay. And not because I'm a bear, not because I'm a perma bear. I mean, actually, I'm long, right? I'm always long. That's the nature of hedging. But I can see and understand the reasoning and the logic as to why the markets should break down. Okay. I think if you look at housing markets are collapsing already. Okay. Or not already, again. And how do you know? Well, when houses are selling, when they're flying off the shelf, basically, which they were, especially in the no tax states, and suddenly they stop selling. Okay. And I tell the story, and you may have heard it before, but that tough potatoes, you'll hear it again. It's a short one, but there's in my neighborhood, I live in a new house in Nevada, and I go back and forth, but I live in a new house in Nevada, in Las Vegas. And, when we were buying here, there was all kinds of premiums and blah, blah, blah. And I said, no worry, I'll write a check. I'm not worried about it. Just let me have the house. And you couldn't get them. Now, suddenly there's like 4 or 5 houses for sale in a couple of block radius of me that have been for sale for a month. Those would have never lasted 3 months ago. They'd have been gone already at over list. But the point to the story is that my wife was driving around and she saw a 55 plus community that we looked at. And I thought, hey, first of all, I'd like to go to one floor. I'm sorry that I took a 2-story, but, and so we looked and they're already offering perks, okay, on brand new construction. Okay. They're already offering rebates now. So those are signs. Look, you can choose to ignore them or you can choose to say you understand. But those are certainly warning signs, okay, that something is amiss in the world, okay, in the economy. Okay. And then you talk about the jobs, right? I mean, jobs are not what they appear. Okay. Most of them are replacement jobs. We're not doing any more production here. Okay. We can't even get supplies. And the funny thing, well, it's not funny, I shouldn't say it that way, but you got more layoffs than you got new jobs, but they don't count yet because they just came in. The job number for, I don't know, for 30 years anyways, has been a crock anyways, right? They don't use the proper data when you really look at it. They should be using what they call the U6, not the U3. And so it's an artificial number which gets revised every month anyways. So the reaction off of one is really just nothing, because at the end of the day, here we are in the same position. And as you look, though, you see that every market is, pretty much at probably a support level, and it would be no surprise to me, okay, if we get a little bit of a dead cat bounce, a little bit of a rip your face off rally. Welcome to the Vegas market riding high in April, shot down. But listen, they're all like that. That was my biggest concern, more so in Chicago. Okay, when I was selling my house before I bought another one in Chicago, I didn't want to be stuck because I knew in my mind that this market was going to collapse. Okay, and listen, it's a very simple reason why the real estate market is starting to collapse, and that's only because of money. You realize that new mortgages in most places, I got to qualify for a 7.5% mortgage. Okay. Now, again, 7.5 and 3.5 is quite a bit of difference. And suddenly the value of that house, that $400,000 house, is now $300,000, because again, it comes back to what? The monthly payment. This has always been forever the problem in recent vintage when we went to this ridiculously cheap money policy. And speaking of that, now you have the Federal Reserve, the morons at the Federal Reserve, hiking rates into a recession. Now, I know they changed the bar on what a recession is, but they're hiking into a recession. Never in history has the Federal Reserve hiked rates into a recession. Now, I'm thrilled that they're hiking, okay, because again, they're way too low. They should have never stopped hiking back when Bernanke tried in 2013. But they became a slave to the markets, okay, which is ridiculous, okay. but it is what it is. Again, there are certain things we have no power, no control. Okay? But that is ridiculous. They should be a slave to the market. Okay, they should trade like everything else. Okay, the demand for money is, as I said, every step of the way through that period, the demand for money was high, and if your credit wasn't sterling, you were going to go to a Prosper or one of those peer-to-peer lenders, and you were going to get screwed on rates anyway. So it didn't really matter. Okay, but now that rates are starting to rise, okay, it's not a surprise, but they should be higher, but they're still negative. Okay, it's a drinking time. Take a shot every time in this administration. There was never before. Well, again, look, this is not just this administration. Listen, I will call, as they say, I'll call a spade, right? And I'll blame Biden and his administration when I think it's appropriate. This is not. I mean, Trump begged for low money, cheap money too. Okay, and I'm a fan of Trump, but he begged for cheap money too. I didn't like that. Okay, and I can't put all the blame on this administration. Okay, because I know that much of the things that I'm talking about go back years and years and years. Okay, because that's how you get a $30 trillion deficit. Okay, interesting enough, the tax revenue was a record in 2021, and yet they feel they're compelled to have to raise taxes again. Okay. Now, I always have the question. It's always the same question. That is, how come non-tax states like Nevada, like Texas, and many others, Tennessee, Florida, thrive, okay, and don't have high taxes, and yet California, Illinois, New York, and others that continue to gouge your eyeballs out are always broke? It just never made sense to me because they spend too much. Okay, and they're not compelled to live on a budget like you and me. And again, I think that's a bunch of horse manure as well. Okay, I think that's also a problem. Okay, that they are not forced to live on a budget as we are. Okay, if we did the things that they did, we'd be either in jail or bankruptcy court. Okay, and I'm getting sick of. Okay, I didn't like all the bailout. The way that COVID was handled, I thought was horrible. Okay, from the bailout money to the rent moratorium. Okay, I mean, are you kidding me? $428 billion surplus. Of course, the Fed has a budget, but they don't live by it, and they have the power. This is the problem. Okay, this is the problem when you violate the Constitution. Okay, at every step of the way. And again, this is not just now. This has been going on. This debt has been kicked down because they had the ability for cheap money, right? They could always evaporate your dollar. Okay, if you think about this, okay, they have the way it's called taxation without representation. They can offer a secondary basically on your cash, okay, and make it worth less. Okay, and think about it again. You may be making a lot more money today than you were 15 years ago, but I'll bet you that you lived a hell of a lot better 15 years ago on less money. Okay, because again, the dollar, even though it's at high prices, is really worthless and worth less. Okay, so this is the problem we have. The central banking system is fraudulent. Okay, I know it's a big word, but it's factual. Okay, they're not following their mandate whatsoever. Okay, they're not supposed to be involved in half the things they're involved in right now. Okay, but this is, again, even with the overall Constitution, the federal government was never intended to be the number one employer in the world. Okay, government is supposed to go city, county, state, and the Fed is an overseer or a mediator. Okay, not the ultimate power. But sure enough, look at what happened now. Okay, it is the ultimate. Okay, and it's the ultimate screw job of stealing from the middle class. And certainly this administration, now I will blame this. I thought that the Democratic Party was supposed to be the party of the small, of the little guy. Okay. I always thought that was what we were taught. And listen, I'm a libertarian and I voted on either side because obviously here we don't get no RC Cola, we get Coke or Pepsi. We only get two choices. But I thought they were supposed to be the party of the small, and you heard, AOC with her tax the rich, they don't pay enough taxes. Well, they pay more taxes than anybody else. Okay. Remember the dress she wore? In the meantime, they have systematically put out of business every small business. Okay. Now think about it. Look around your neighborhood. Okay. Look in your own backyard. The local drugstore don't exist anymore, basically. The local grocery store, the small guys don't exist anywhere, virtually nowhere today. Okay. Why? Because they're so far priced out and they can't compete. Okay. You got Amazon, Walmart, and Google and Facebook and Twitter, and look at who else you got. Basically, think about it. Okay. Again, you don't have to take my word for it. Think about it. Okay. And when you talk about recessions, you have to look at listen, economists are stupid. Okay. They have a formula. Okay. And now they just changed it because we're already in a recession, but they changed it. Of course, I say we've been in a recession. And if you listen to me 6 months ago, I said we were already in a recession. But either way, they do what they want. But again, but I just urge you, look in your own bank account, look at your own spending. Okay. If you're not spending more than you're making, then you're in pretty good shape. Then maybe it's not a recession for you. But I would say the mass majority of this country is spending more than they're making now. I mean, it's hard to overcome the cost of oil, the cost of gas, which they don't even count at a fair count in the inflation numbers that they give us. Again, and this does not go just to this administration. This goes all the way back. Okay. Food and energy is the number one cost for every American family, barring some major emergency. Okay. But if you don't have an air compressor go out, or you have to make a major expenditure throughout the year, what do you spend the most money on? Food and energy. Congress hasn't passed a budget in 10 years. Well, they have a budget, but they always have to raise the debt ceiling, which is basically a way to screw the American people. Okay. And I guarantee you, they're sitting in that room when they get the whole country sweating. Oh, are they going to raise the debt ceiling? Are they going to shut the government down? And they're sitting there and going, well, how are we going to screw them today? Okay. Look, this is if you've heard some of my old radio shows and things, hell, I knew about this crap so long ago. It's a joke. Okay. But again, you now have Russia cutting off supplies to Germany, natural gas. Okay. So that Nord 1 pipeline. Okay. And God forbid we would be in position to help them. God forbid we should be fracking and shale producing so that we could actually bring our gas prices back to $2 a gallon, which is where they belong. Okay. Bring our transportation costs down. And at the same time, be able to help the UK, who's getting murdered on natural gas, and Germany, and actually make a profit, giving them a deal, making us a profit, and reducing our deficit. God forbid we would do that. Okay. But again, we're not going to do that. It's simple to see that this particular administration doesn't want to fix the energy problem. Okay. And they're going to continue on this green energy thing, which is ridiculous from a simple point that they can't get there fast enough. On a small scale, you can get there. On a big scale, you cannot get there. Okay. We don't have the power grid. So how are you going to get there with no power grid? Okay. Tell me. And maybe they can fix the power grid. Okay. But again, they don't want to because it costs money. They don't get to line their own pockets with the money. And this goes back every election that I have voted in. The candidate said, we're going to fix the infrastructure, right or wrong. Every candidate, Democrat, Republican, we're going to fix the infrastructure. Every one of them said it. And how many have done it? Close your eyes. What do you see? That's how many. Okay, 0. Okay. Now, you've heard this story from me before if you've been around, but, Katrina, as bad as it was, did not have to be as bad as it was, because the Army Corps of Engineers told the government that those levees were not going to hold anything, and they needed to be fixed. And of course, the government chose to spend the money elsewhere. And what happened? Devastation. So not only did we lose a lot of lives that we didn't have to, and destroy a city for a year, okay, and cost the federal government a fortune instead of doing it right in the first place and fixing it, okay? California has been told that EV owners not to charge their cars during, yeah, of course. Listen, we don't have enough power. Again, remember, you have to have enough power to turn on and charge, right? We get the occasional rolling blackouts, and that isn't over yet either. This is what the problem is when you don't have enough. Okay. And again, what would solve that problem? Well, fossil fuels. That's what would solve the problem. Okay. But again, we're worried about the climate change, and we don't care at what cost we destroy Americans. Okay. We don't care at the cost to destroy the middle class, right? Because if they did, then they would be shale producing and fracking, and we'd have plenty of natural gas and plenty of oil. Okay, and the carbon footprint wouldn't change a bit. And that's if you believe in climate change. Personally, I don't. Okay, personally, I hang out with a scientist. I mean, a legitimate scientist, not somebody I made up as a scientist, who's retired. Okay. And he said, he stopped me in a bar one day in Las Vegas, and he said, I know you. I said, hell, you do. He says, you're on Varney. I said, oh yeah, maybe you do know who I am. You're Bob. I said, yeah, that's me. And he started talking. He says, why does everybody lie about climate change? I said, well, I don't know. Tell me. You tell me why I should be on your side. And he explained me this whole thing, and I looked it up, and it makes sense. Okay. And it's just something that rotates. But again, either way, we're still not prepared. So you have to ask yourself the question, at what cost do you want to destroy Americans? Okay. At what cost? And basically, it's not really just Americans only. At what cost do you want to destroy your middle class? Because that's really what this is all about. Okay. This is more about the Great Reset. Okay. And almost an engineered worldwide recession by the central banking system to reset everything. Okay. Now, again, you can say I'm full of crap, which is fine. I don't care. Okay. I mean, we're all entitled to our opinions, and that's mine. Okay. But I don't see a great way out of this without a major change in November. Now, I don't ever like one party in control. I don't care which party it is. Okay. These guys run amok. I want to see some negotiation. I don't want to see a free reign for anybody. Okay. I don't like it when, again, first of all, I don't like that we only have 2 choices to begin with, because we got 2 shitty choices always. Okay. And you don't have somebody who really believes that, there's 2 sides to the coin, right? You don't have to be all one way or the other. You can actually mix it. It's kind of like the economic system that you go through, right? Here we use the Keynesian theory, okay, which is, ridiculous. No, nobody should go. There shouldn't be recessions, okay, and we shouldn't let businesses go out of business. Why shouldn't a business go out of business? If you're not strong enough and you don't make money, why shouldn't you go out of business? Give me one good reason. Nobody ever bailed my ass out if I was in trouble. Okay. Why should we bail out anybody? They shouldn't have bailed out the banks in 08. That's for sure. Okay. If you were concerned, you should have bailed out the depositors, not the banks. Okay. Screw the banks. How would you like to be in a business? You make a fortune, and if you go broke, you get to make another fortune because the Fed's going to bail you out. What kind of is that a fair and square deal to you? Don't sound fair and square to me. Sounds like I'm getting ripped off as usual. Okay. So again, I think you have to, again, understand where we are and what we're doing. And of course, that leads to what? That leads to also, what's happening in the economy, what's happening with your finances and your stocks and whatever you're holding. Because everybody holds stocks somewhere, whether it be mutual funds or whatever. And we'll get started with the actual call in about 17 minutes. This is just a pregame. I just come and hang out I like to hang out early and talk about markets. So I'm just hanging out and mouthing off. That's my thing. This is my forum. but I mean, look, I mean, you got jobs getting cut all over the place. Okay. You got Walmart laying off, you got Facebook laying off, you got Credit Suisse laying off. Okay. And now they have a bigger audience at the moment. I did not hear the speech that President Biden gave the other day, but what I saw and read about it, it wasn't very good. Now, if you're a right or far right, I already know what your opinion is, but I'd like to get the opinion of somebody who's not, because because I didn't hear it and I'm not going back to listen to it. Okay. I don't want to waste the 24 minutes of my life. Okay. But I'd like to know what your opinion is of the speech, because what I heard was not good, but I want to hear somebody else's. I tried going out of business for the last years. I keep raising your prices and they reply, how soon? Well, because there's no help, right? Your industry right now is as hot as can be. There's nobody who will do it. So you're making a fortune. Okay, because you keep raising your prices and they want it done, they got to pay it. Okay, how about that? Okay, please review at some point today how to attend Vegas event. Yeah, you can attend. I'll do it right now. I mean, you can email me direct at bub@bubbatrading.com and I'll send you a link to sign up. Okay, and it's going to be at the Circa Hotel in Las Vegas. Okay. And I love the Circa. And we're going to be the first event in that room too, by the way. They just put the ballrooms, the rooms in for that. But in the meantime, it's on December 5th, Monday is a cocktail party. And then 6, 7, and 8 are hard charging teaching for 3 days. Okay. We don't screw around. I mean, we work our ass off for 3 days, have a good time, but we work hard. And you can come to that. So I can send you a link if you're interested, want to come. And if you have an account with Tradier or open an account with Tradier, they will make up the difference for the original early bird. Okay. So that would be also something that you can consider. And of course, Tradier is one of our preferred brokers. Anyways, I keep making Bubba steaks. What's wrong with that? Okay. What's wrong with that? Bubba steak, we've been doing pretty good day trading. Of course, you're not always there, but we've been kicking ass pretty good in the morning, especially in these crap conditions. Okay, but again, the markets are markets. I can't dictate what the markets are going to do. I can only trade what I can see. Okay, but so we go back into again, the issues that are at hand, and there's a lot. Okay, and look. I don't want problems. I love this country. I want good stuff. I want everybody to be happy, right? Listen, I want everybody to have a fair opportunity. Regarding Biden's speech, he must think he was elected as a monarch. Okay. Again, like I said, I heard a lot of bad things about it. And I know that I heard that he had walked back some of it yesterday, I guess. Again, for those of you who don't know, I don't watch news. I don't read the news. I could give a crap about the news. To me, it's all worthless. Okay. Because again, depending on what channel you tune in, you're going to get somebody's point of view. I don't want somebody's point of view. I just want the facts. So basically, I watch VSiN Sports and Information Network all day long. Okay. Because I bet sports too. So I'm listening there for information. Okay. I could care less about. I haven't watched a news network once in the last 5 years, and it was only I had to watch part of the State of the Union until I threw up. Okay, because I was going to be on the next morning to talk about it. But other than that, I don't watch any of it. I don't read any of it. I've never read the Wall Street Journal. I've never read Barron's. I'm not sure I know how to read. Okay. So, anyways, but yeah, Vegas, just send me an email and I'll send you the information you need. It'd be my pleasure. But so the markets themselves, look, again, credit card debt is at the highest it's ever been. Okay, think about that. Now, how bad is that going to be? Okay, credit card debt is the highest it's ever been. Now, obviously, dollars are cheaper, so it's part of the like salaries. We hear these monster salaries, right? But again, obviously, a lot of that's inflationary, right? I always go back to, if you remember Magic Johnson, okay, if you remember when he was the first like $1 million guy, and Dr. Jerry Buss gave him $1 million contract. So he gave him $25 million, $1 million for 25 years. Okay. Which at the time sounded like a lot, but it turned out to be pretty cheap. Okay. So, again, they're playing with basic monopoly money anyways. And they make so much money that it really doesn't matter, right? TV pays them so much, and they're still making a fortune. But so money is, again, what they make it to. And again, it's really not what is the dollar worth, not what this worth, is what does it buy? Okay, that's what you're concerned about. What does it buy? And I say it buys less. So now credit card debt, which is not dischargeable in bankruptcy, okay, at usury rates, right? 22, 23%, whatever they are these days. I don't know. I've never had a credit card balance. I don't know about it. But at usury rates, I mean, some of these people are never going to get out of debt. And because they can't get discharged in bankruptcy, they're going to be paying for the rest of their lives off of a credit card. Think about that. Okay? This is why preparation is so important, which is going to lead into what we're going to talk about in a while. But this is being prepared for everything. There's many different styles of things that we do in life, okay, from a trading to an investing standpoint. And you have to remember which one you're doing. Okay, are you investing or are you trading? Okay, because the difference is very way different. Okay, and that's where you have to make the overall understanding. Okay, is to be in a position that you know what you're trying to get done. Okay, because when we invest or when we trade, we're really trying to accomplish two separate goals, both to make money, but one to make money much quicker, and one to be more in what we call delayed gratification. Okay, by protecting. And these are always the things that too many make mistakes on. And I think if you go back over the last couple of weeks when we had some heavier selling, when you saw some, like maybe some panic or some things selling off in the market, I will tell you this, okay, much of that is idiot investors that are selling good positions or winning positions to protect dogs and losing positions. That is as common as it gets, okay? And that is the absolute opposite of what you're supposed to be doing. Okay. I mean, if you sit back and just think about odds and probability, okay, if something is strong and remaining strong and good, doesn't it make sense that it should continue to be strong and good? What reason would you have to believe different? And if something is bad and going lower, what would you expect to be changing? Okay. And again, these are things that we don't think about. Okay. And but it's basic logic. It's funny. For those of you who may or may not remember, but when crude oil, when I was a kid, crude oil was $9, which is why it was great to import it, because it was $9. Okay. Then it went like to 11, and it got to like 30. Okay. And then, so I go, oh, 30, maybe we should look to sell some of that. And my partner says, it's probably a good chance to be a buyer because it's pretty strong, and it's probably looks like it's going to get a lot stronger. FYI, voted in favor of a bill that does not allow credit card debt and student loan debt to be discharged. Yes, I know. I know. Listen, he's voted for every racist bill. He's voted for, listen, nothing personal, and don't take this the wrong way, but he's as dumb as it gets. Okay. He's one of the dumbest people in the world. Okay. I mean, he's just dumb. Now, how he got to be president, I'll never know. But, he's dumb. I mean, again, like I said, I was shocked that Kamala Harris took the nomination because, she ripped him for being a racist, which he has voted. I mean, again, this is fact, not fiction. Okay? He voted for every racist bill that's ever been brought to the floor in his tenure. Okay. So again, you can say whatever you want. You can call me full of shit, but those are facts. So those are undisputable facts. Okay. In the meantime, we got a problem with China now too, right? I don't know if you're following the Taiwan situation at all, but China is threatening countermeasures now if we help Taiwan. Okay? Because China is trying to, take over in their own quiet 100-year plan. Okay. So, there's so many things that are alarming. Okay. But the biggest one and the most important one right now is the cost of gas, the cost of fuel. Okay. Because 80% or more of our lives are affected by what? Fossil fuels. Okay. So if we're going to be in that position where 80% of our life is affected by fossil fuels, which it is, from whether it's from either making the good to delivering the good to filling up your car, 80% of your life has something to do with fossil fuels. Okay. Why are we destroying our middle class? Not when we have the natural resource right here, which even if we went back to, we're not drilling in the restricted lands. We're not going, we're taking it out of the ground the easiest possible way we can with no real mark on the footprint. The real footprint, the carbon footprint comes when you burn the fuel. Is Saudi Arabia's fuel a lesser pollutant than our fuel? Okay. Not to mention that coal is being burnt at a record high. Now we don't provide any of it because we stopped, Obama shut the coal industry down in one day. Boom. Kind of like what Obama did with oil. I mean, what Biden did with oil. They shut it down. Okay. Now, why would you destroy an industry in one day with one signature? Okay. When this is more to the coal people, because coal miners are almost bred to be coal miners, right? It's very hard to get out if you're from that area. Okay. And they have no education for anything else. Why wouldn't they gradually shut down, knowing that the world is going to use coal? I mean, 50% of the world now is burning coal. Okay. So does that pollution from the coal not come over the United States? Do we have a special, like a shields around that stop the pollution from coal coming here? And they keep using more record numbers because, again, it's cheap fuel. So when you weigh the cost of what's going on with fossil fuels right now, okay, around the globe, because we were a big supplier and no longer are we, okay, suddenly, because you've got 40% of the world, which is China and India, that are never going to stop burning coal until they find something cheaper. But it's still the cheapest energy source. Okay. So those are the issues that are at hand. And, we'll see. We'll see how it plays. Okay. But again, overall, think again, where's the middle class going to be a year from now? Okay. I mean, things don't look real rosy at the moment. Okay. Now I'm hoping, listen, I love America. I'm an American, but I am getting sick and tired of hearing that America is the greatest country in the world, which it is. But I want to know why we keep settling for less. Okay. I want to know why we keep just saying it's the best country, yet we give up some of the things that make us the best, like taking care of our people, like taking care of our citizens, okay, which we're not. Okay. So you can give me this is the best country in the world, which it is, and I'm proud to be an American. But listen, for me, I'm 65 years old. I ain't gonna be around when the crap really hits the fan here. Okay, if it does. But I'm worried about my kids, the grandchildren I don't have yet. I'm worried about your kids and your grandchildren, because this is not a pretty picture. Okay. And what's going on right now is not a pretty situation. So you can look at it as any way that you want, but what we got going on right now is not very appetizing. Okay. But we continue to say, well, America's the greatest. And I got news for you. A lot of people, a lot of countries are laughing at us, and notice how we're losing some of our supporters around the globe as well. Okay. Do you think that's by accident that that's happening? Okay. Everybody can see people are picking sides now who they think is going to be at the end all. Okay. I'm not saying they're right. And I'm not saying they're picking the right side, but certainly, don't you believe that we as Americans in America should be showing strength and not weakness here? And I think we show weakness right now to the rest of the world. That's my opinion. You can take it for what it's worth. I'm going to stop this recording and we'll get ready for the presentation. This is the pregame. If you want a copy of it, I'll send it to you above Trading. Otherwise, you won't get it. But if you want to listen, go back and listen, or you didn't hear it, you can. Let me stop this part one, and we'll get into the presentation. Hold on, stop. Thank you, darling. I appreciate it. Okay. And get on to. What's up, everybody? Good morning. Good morning. And I see many of you checking in now because you didn't know that I'm a goof and spending and go an hour before just to bullshit. I've seen him speaking with his younger. He's far from dumb. Biden is a good pawn for whoever. Well, whatever. Again, I don't want to get into political discussion. Okay, I made my points, and I think they're valid. Okay, and I would discuss anytime, but this is not the right venue nor time. Okay, so whatever you look, I believe that we're all entitled to an opinion, and I don't say you're wrong. I just don't have time to discuss it, and it's not fair to everybody else. So, anyways, I got to kind of stammer and stall here for about a minute or so. But I will say that this is the hedging class, and for those of you who have been through hedging before through the session, which obviously the course is 12 years old, believe it or not. Okay, and I'm just tired, and I appreciate all those who were concerned about my health. I'm healthy as a horse. Okay. Believe it or not, I'm smoked for 40 years. My lungs are crystal clear. I did a stress test longer than any athlete does. Okay, the whole nuclear crap. So I'm in great shape. I want to play more golf. I want to go back to how I used to live. Okay, and not work so much. That's why. So this is the last hedging class that I'm ever going to do. Okay. Now, for those of you who have lifetime membership, which you know me, you'll get a quarterly review. There just won't be full sessions, 8 full sessions as we do for this. Okay, because you don't need a lot of the beginning stuff. You need the changes or the things that are happening in the market. So once a quarter or so, we will do our reviews. Okay. All right. So welcome aboard, everybody. Great to be here. And we're talking about hedging your portfolio today. And again, I call it the greatest trade ever. Okay. And in my opinion, it is. And I think you'll find that in many others, it is also the greatest ever. Okay. But one of the things that I pride myself on as an educator, as a coach, okay, as I focus on fact, I'm not trying to get to your fears. Listen, I could be like all those other idiots out there, either selling you the dreams of a lifetime, of the billions you're going to make overnight, or the fears to make you react. I don't believe in any of that crap. And that's not what I do. Okay. I could have been probably one of the biggest in this industry if I chose to be a snake criminal. I didn't want to be. Okay. So I want to tell it like it is. I want to share with you how to do better for yourself. That's what I care about. Okay. That's what my life is. So I always talk about facts and actualities. I'm not into this BS crap. Okay. Anyways, you have to see the disclaimer. All right. Because it's part of the legalese of the business. Okay. Options or future, whatever. There's risk. There's always risk. Okay. But fortunately, if you're hedging only, I can define that risk down to a mathematical certainty. That I can do. Okay. So, But know that there is always risk in any time that you're investing. But you have risk now. If you're invested, you got risk now without. But yes, there's always risk. Okay. And just a quick note, I got this the other day. Okay, 8:30, right, Tuesday. I hope you've been well. Hedging, one of the best investments ever. An eternal thank you. Okay, and I get these every day. Okay, especially when the markets go down. Okay, because it does what it's supposed to do. It does exactly what it's supposed to do. In the meantime, you know, the emotional cycle of investing, okay, it's been around forever. You can go back to, you've all heard of tulip mania. You've all heard of, maybe the South Sea bubble. Okay, listen, the internet bubble, you go back to the 90s. They all ended the same way. Everything always ends up in the same crap. Okay, people get too aggressive, they get nuts, they start buying, they start going crazy. Okay, or they start selling either side, and then of course it's over. And as we used to say on the trading floor, they come back with different owners. Okay, that is not how you want to be a trader. Okay, that is not how you want to be an investor. Okay, you have to have a rational, logical explanation for everything you're going to do. Okay, these emotions are going to kill you. Okay, and I'm sure they've already done so. Maybe kill is too strong, but they're going to hurt you. Okay, and I'm trying to help you avoid that pain. And just, if you've ever heard of the South Sea bubble, okay, that, by the way, the final debt payment that just got paid back, that was in the 1700s. Okay, the final debt payment was just paid back in 2021. Okay, but the reason I'll talk about it is because you've all heard of Sir Isaac Newton. Okay, well, Sir Isaac Newton during the South Sea bubble was today's equivalent of a billionaire. Okay, and he'd actually gotten out and cashed out and took all his money. And you know what happened, right? He couldn't stand himself, and he got back in, and he died a pauper. Okay, so again, this you got to stay away from. You have to learn to be even keel, and of course, you can do so, especially if you're hedging with what I'm teaching you, or I'm going to teach you. Anyways, if you don't know me, I am Todd Bubba Horowitz, that handsome guy there. I think I look better now. Anyways, I've been trading for 44 years. I was a floor trader. And, about 12 or 13 years ago, I became a teacher because there was no more trading floor. Okay. And I was one of the original market makers in the SPX. Okay. And the nice thing I always share with everybody is whatever I teach, I trade myself. And if it's one of my recommendation services, you ain't alone in the trade. If I give it out, I'm in it with you. Okay. But here's my point. News is noise. Now, if you're at the pregame, you heard me talk about news. News is worthless, okay, especially in today's world. Now, has anybody here ever made money on news or inside information? Okay. And if you say yes, I'll call you a liar. Okay, because there ain't no inside information anymore. That's over with the technology. When I first started, there was a little bit out there. Okay, but there ain't any more. And the real problem today in news is what? Okay, I put up 6 networks, and it wasn't anyone in particular. I got Fox, I got CNBC. They're all going to give it a different spin. So what is the real news? Nobody gives you the real news. But know this, if you try to trade the news, you're going to lose. Guaranteed, you have no chance to make money trying to trade the news. Because when you get it, it's already old news. Okay. Pelosi didn't have your news. Okay, you're not going to get Pelosi's news. That was already out, right? Again, you're not going to get that. You're not in government, okay? Is anybody having trouble with the sound cutting in and out for a couple of seconds at a time? You're the only one who said so, honey. I don't know. I don't know if anybody else has a problem or not. I have not heard, and usually I would. Okay. So, again, Pelosi, her husband bought a bunch of NVIDIA stock, and then she had a bill voted for, but that's another story. Try to trade the news, you lose. You have no chance. Okay. You want to watch? Listen, I don't watch any of these imbeciles. Okay. Because why? Because what is their purpose of news? To raise advertising revenue. So they're going to be as sensational as they can. Okay. So you want to listen to these guys, Jim Cramer? Look, you may find them entertaining. Okay. I could live with if you find them entertaining. But certainly, if you listen to me, be broke. Okay. everybody says I sound great, dear. It's got to be on your side. Okay. I would recommend logging in and logging out or whatever, but everybody says I'm great. Okay. Not my presentation, my sound. I mean, again, look, you get BS from these guys. Okay. You get entertainment, not information. Okay. Your information needs to be done on your own. You need to learn what the information, what the markets are telling you. The market will give you all the information you need because you're never going to be, remember, in today's world, with all the technology, Goldman Sachs, JP Morgan, Morgan Stanley, they're paying millions of dollars for people to compile these reports before they ever come out. They knew that jobs number was coming out before it came out yesterday. And it wasn't inside information. If you know the right formulas that are being used, there's enough information spread out from even from the government itself that will give you that information. Okay, so don't kid yourself. You're not going to do that. Okay, worthless. Now there's warning signs, right? I mean, look, Danger Will Robinson. Remember that? What was that show again? I forgot what it was already. But anyway, Danger Will Robinson, Danger Will, you know, the sky is falling. Look, I'm not a fear guy. Okay, but there is plenty of warning signs. Now, this is one of the problems. You know, we continue to say that America is the greatest country, which it is. Okay, but again, do you think there's not problems? Don't we have some pretty big warts right now? Okay. Now, look again, warning signs don't mean you react this minute. Okay, if you're in the market, okay, if you're not hedging, okay, it doesn't mean you do something at this second, but be aware. Okay, again, you want to be aware of your surroundings from the chart, okay, not the news. The news is never going to help you. By the time news hits the street, it's already old news, okay? But no, and you, listen, I talk about this all the time. If you think there's a recession, okay, or if you don't think there's a recession, I actually just look at your own bank account, your own spending habits. Are you keeping up with the pace of inflation? Okay. And I would venture to say that 90% of you are not. Okay. Now, today could be Sunday, right? I mean, someday we're going to crash. Today, no, obviously not today. We're closed. We get a break. The markets are closed. Okay. Is it going to be Tuesday? I have no idea. Okay. I don't know when the markets are going to crash, but I will guarantee you they will collapse again. Again, this is not because I'm negative on the markets right now. This is because it's a matter of history. It's a matter of fact. And certainly all these warning signs adding up tell you that at some point you can't hold it all together. Okay. You know, right now we have built this massive house of cards. Okay. And at some point, again, I'm not going to be playing for the crash. In fact, you know, I do a lot of media as well. And, you know, until last week and part of this week, even though I said, I think we're going down 50 to 60%, we were still long, okay, in our trading portfolios. And of course, I'm always long equities. So, you know, I'm always personally 100% in, okay. But I think the problem is you panic, okay. And that's, you know, panic is not a good thing, okay. Trading, investing is about logic. It's about having the ability to step back and take a deep breath, you know, and look at it. And again, the hedging model itself will first of all, teach you how to be calm, okay, and sleep at night. And B, will actually help you buy when everybody else is selling. Now, I hate to use that quote because I can't stand Warren Buffett. I think he's two-faced, but that's a story for another day. But it is his quote, okay? I'm buying when everybody else is selling, but that's the fact. That's where you want to be. You want to be buying where everybody's selling, okay? Power bill is twice as high. Water is, yeah, it's getting higher. Believe me, you ain't done yet, okay? It's going a lot higher, okay? Trust me. But again, this is not a panic business, okay? This is a business of logic, of being prepared for what to do next and using tools that are available to you, okay, to get there. Now, I can teach you those tools, and I will, okay? And you'll have a chance to become a member if you want. And if you don't want that, I don't care either, okay? Again, this is my last time I'm teaching it. I've taught thousands of people that love it, that actually Many of them come to every class I've ever had. They keep coming. Okay. So in the meantime, what makes a good investor? Okay. Because that's what hedging is for investing, not for trading. Okay. Now, just full disclosure, and so you understand, the hedging model was actually born before I knew it was a hedging model. Okay. Because, when we were floor traders, we were always kind of hedging off or arbitraging off positions. Okay. Naturally. So I just incorporated this into this, and you can look for what I teach all over the internet. You'll never find what I teach. Okay. Because again, I assure you, any of you who've been my members or anybody who's going to become a new member, you'll know more about options than 99% of the population if you come aboard. I saw a picture of a lady in England with a small business in England. Her power bill is 2 months was 10K. Well, England's getting murdered. That's no surprise. Okay. You got to have a plan. Okay. You got to stick to your plan no matter what. You made a plan for a reason. So you got to stick to it. Okay. You have to be diversified. Okay. In thinking, not in positioning. Okay. In thinking. All right. You're going to be able to do things now that you could never do before. Because I'm going to debunk all the things you've heard if you have an advisor. I'm going to debunk everything you've ever heard from your advisor. Okay. Because advisors are full of crap anyways. And my son's one. So, but he's not full of crap, because I said to him, I taught him when he was a kid. First of all, he learned how to trade when he was 16. Okay. But I taught him when he first went into business, I said, you got to separate yourself away from those guys, because you have to show people that you really understand the market, not how to get their money. Okay. You got to have patience. Okay. It ain't going to happen. Just because you want it to happen now, it don't mean it's going to happen now. Okay. You got to be able to tune out outside noise, which is more news than anything else, right? You start hearing this stuff in the news and you can tell me you're not affected by it, and I'm going to say bullshit. Okay. Everybody's affected if you listen to it. Okay. It's virtually impossible. If you hear enough bad things, it's virtually impossible not to be affected. You got to do your homework. Okay. You got to study a little bit. Everybody wants to get rich, but nobody wants to put the work in to get there. Okay. Everyone wants to build wealth, but they don't want to work for it. You want to work for it or not? If you don't want to work for it, then I'm not your guy, because you're going to have to do something. Okay. To get there. Because again, you have to continue to learn. I'm doing this for 44 years. Okay. That's all my career has been, for 44 years, a full-time trader. And I still try to learn something new every day. Okay. And ask my members of my option class that come every Saturday. We try to learn new stuff every time. Why? Because there's always something out there that can be better. Okay. What about humility? Are you telling me that I don't have humility? If you are, then you don't know me. Okay. And you probably shouldn't be here. Okay. I'm as humble as it gets. Anyways, knowledge. You got to work on your knowledge, right? Not knowledge of the news, but knowledge of how it works, how your positioning works, what you're trying to get accomplished. Okay. Oh, okay. Investors. Of course, investors. Listen, investors need a lot. Okay. Because there's so many effects that happen at any given moment that create adverse reaction. Okay. And you should be hedged. Again, listen, I'm hedged. I know how to do it already. So, if you don't want to learn it, it's okay too. Again, to me, it's neither here nor there. This is as I say, my swan song. Okay. Now, history repeats itself all the time. This is not news. Okay. Now, I'm not saying that we're going to collapse right now. Okay. I'm just saying that if I look at these two charts comparable, what would my logic, if I looked at those two charts, what would logic tell me was next? Okay. Again, doesn't mean it's going to happen, but what would I think? Yeah. I think we're going down. Okay. Now, again, I've been thinking that for a while. So it's not like it's, but again, just because I think it doesn't mean I trade it that way. But I know, right? I was on the floor in 1987. Okay. I was on the floor in 2001, excuse me. And I was on the floor in 2008. Okay. I lived through these, and I can tell you the ending is not going to be good. Okay. And if you're not prepared for it, you're going to get barbecued like you did every other time if you've been alive longer. Okay. Again, you got to understand the history. That's why we learn how to read the chart. Okay. Yeah, most of you suck. I only put that in more for a little comedy. Okay. But it is true. The average investor sucks. Why? Because you don't understand of what the idea of compounding is. Okay. Realize this. Okay. Whether or not you become a member with me or not. Okay. Whether or not you join my service or not, it means nothing one way or the other to me. But I want you to learn this. Okay. Never panic and puke out of your positions. Okay. If you have to panic or puke out, you have too big of a position on versus the capital that you have. Number one. Number two, it's a mistake. Timing the market is for losers. Time in the market is how you win. Okay. Which is what even makes the hedging even better. It allows you to stay in through all kinds. But at the end of the day, most investors think they can time it. Okay. And I know there's still some people that got out in 2008 that are still not back in yet. How do you think they did over the last 13 years? Okay. With their investing at less than 1%. Okay. And bonds. Okay. The bottom line is, look, okay, you got to stay in. You got to stay invested. Okay. That's how you compound your portfolio, by growth. Okay. The market goes up year over year. It doesn't go up every year, but year over year, it goes up higher. But as you've all learned, in a bull market, everybody's a genius. Okay. Pick anything, they go up. Everything goes up. Okay. Didn't we watch the Bitcoin stocks go crazy for a while? Okay. Didn't we watch every stock go wacko for a while? Suddenly, they're not all going so wacko. Now they're suddenly, all of a sudden, we're starting to see, beyond meats, right? Suddenly, stock was over 200, under 20, I think now, or 22, whatever it is. Okay. Again, the companies that are no good are no good. Okay. And if they don't make money, they can't stay in business. It's an interesting fact. You got to pay your bills, and you got to make money to pay your bills once you run out of the investors' money. Okay. And part of being a good investor is paying yourself first. Okay. And I did a good job teaching my kids that. Okay. Your first check you send every month should be to your investment account. Okay. And you've got to cut back somewhere else, so be it. But you want to get to that time when you're ready to retire, and you may never retire. I'll never retire. I mean, I'll be trading until they'll find me laying on a screen someday. Maybe I'll make a lot of trades with my face when it hits the keyboard. I don't know. But the overall, the ability to have the capital that you need to not work if you choose to. Okay. You should start by paying yourself first, because believe it or not, a couple $100 a month being put in every month, in addition to your IRA, and your IRA should be fully funded, and you should really more be in a Roth than anything else. And if you're self-employed, you should ask about a cash retirement plan. Interesting take on retirement. But again, pay yourself first. Be prepared. Okay. So how do you solve it all? You stay invested, right? You got to be in the market. Okay. Again, remember, trading is nothing more than the big game. Okay. It's a statistical game, like any other game of statistics: bridge, gin, backgammon, poker. Okay. And if you understand what your statistics are and you play those, then you will be proven right. But you have to have the time to proven right, and the temperament. But you got to stay in the market. Again, whether you become a member or not, I don't care. I'm teaching you right now. Don't panic on the next puke because you're making a mistake. Okay. You can protect yourself from downside risk, which is what we do. Okay. And you can compound your portfolio at the same time. So you can either stand pat in the market and watch go up and down and compound through your dividend reinvestment and so on. And maybe you'll have capital to add in, or you can hedge and continue to compound, or you can panic out and make nothing. That's the worst of obviously of all choices, which is why I will tell you, in all honesty, whether or not you would come with me or not, I would not. The only stocks I ever would sell is a company that would fundamentally change, that was a moneymaker that is no longer a moneymaker. Like if I owned General GE, which I did not own, thank God. Okay. But if I did own them, I would not own them now. They went from a great moneymaker to nothing. Protect your portfolio. Okay. We are investing here. This is not a short-term solution. This is long-term. As they say, a job is a short-term solution. Okay. You want to protect yourself. Okay? Again, I don't know when the next crash is going to come, and I don't really care. Okay? Listen, you know, I go out, okay, and you know, when one of the crashes we had, I think our kids were in 8th grade, they were going to Washington, and I was having a party. The markets were getting hammered, and I was having a party. Okay. Everybody had there, all the other guys that were green, like they were going broke. I go, what's wrong? Well, markets. I said, well, that's a good thing. I could buy some more stock down there. Okay. Again, it's about survival. Okay. It's about staying in a position. And too many of you have a tendency to try to get too big too fast. Okay. Which puts you in problems. Okay. Markets are non-trending most of the time. No, incorrect. Okay. It does not lose most of the time. And it doesn't take that big a movement, but you are correct. The markets are in consolidation 65% of the time. You are correct there. Okay. But you are incorrect on the rest. But that's what the class is for. Okay. Compound interest, right? Albert Einstein, compound interest is the 8th wonder of the world. Okay. Again, if you compound it, it grows geometrically. Okay. This is where you hear the story of the janitor. I know that's not the right term anymore because it's not politically correct, but the janitor who died and he knew he didn't make any money, but he left $20 million to his cat. Okay. How? Because he left his money in the market and he let it compound itself. Okay. And he didn't panic and sell every time. He didn't try to time the market. Okay. That's how you build wealth, is by compounding a portfolio. Okay. Because again, they become geometrically positive by the sheer nature of the ability to compound. So what is hedging? Hedging is a risk management strategy that is insuring your money. You know, I never understood it. I never understand it. How people love to buy life insurance, high commission product. Okay, get screwed there. You gotta buy health insurance or get it through work, and you still got a payment to make. You got to buy homeowners insurance. You got to buy life insurance, which you didn't even get the benefit of. Yet, when it comes to hedging your key asset, the asset that pays for all those other insurances, we don't want to insure that. Now, to me, that is about as illogical as any person can possibly be. Okay, this is like an insurance policy on your portfolio. That's what hedging is, with the potential to enhance and create more yield for your portfolio. Okay. But again, that's always the argument that I get, because hope is not a strategy. Okay. You might think it is, but I can tell you that many of those pirates out there rely on your hope, but hope is no strategy. Now, ask yourself, how would you like both protection and potential? And how to take the benefit of compounding without stressing with the market's ups and downs? Okay, what do you think? Not bad. Okay, but you got to take a few steps before you can get there, right? Investing is not instant gratification. Investing is delayed gratification. It is knowing that you are playing the highest probability day after day, week after week, month after month, year over year, and you are compounding that portfolio, but you're being patient and letting it work. Okay. Because if you're in too much of a hurry, again, this is where people sell the winners too fast and hold on to the losers way too long. Okay. You know, I use this slide. I love this slide. One of my favorites. I stink at chess. Okay. I know how to play, but I stink at it. And by the way, the Queen's Gambit, A++. Okay. But anyways, the general wins the battle, makes many calculations, which is what the software does that we have and our hedging model does. Okay. It's thinking many, many moves ahead, right? The more moves you can think ahead, the better you are, right? That's what makes in chess is the one game that I know of that the best player always wins. There is no element of luck to chess. Okay. And you're thinking forward all the time. Okay. And how do I make that adjustment to what is going on? Just like somebody's asked me about the market's consolidation. Well, there's an answer to that, and where we make, you know, part of our models are accounting for that. Okay. just another note from somebody else. I only hope someday I get to thank you in person. My trading has evolved higher than I've ever imagined. Just to be relaxed, no panicking, waiting for the trade to come to me is so cool. I would never have made it without your help. Look, again, like I said, I get these all the time. I share a couple of them. But again, I'm urging you, never accept a short-term solution to a long-term problem. A job is a short-term solution, okay? I think that, we sometimes think in too short of a box, other than understanding what the big picture is, okay? And I think when you look at it, and this is about as common as it gets, okay? People get confused. Am I trading or am I investing? Am I investing or am I trading? I don't know. I'm not sure. What do I do? Where's Jackie Mason? Amateur traders want to be right. Pro traders want to make money. Which are you? You want to be right? You want to make money. Okay. And again, there is I once did a spot for this, believe it or not, on Liz Clayman and David Assman. I actually talked about this for about 10 minutes on one of their shows. The difference between and the confusion that people get. They should never be mixed together. Okay. Trading is trading and investing is investing. That never the two shall meet. Okay. So does anybody know what this number is? For those who already know the answer, don't answer me. If you've never seen it before, do you know what this number is? Anybody? Bueller? Okay. Very good. I can't say that, but yeah. This is the average, this is the return of the stock market, of the equity market since 1950. Okay. If you go back to the beginning of the markets, the average return is about 8.5% year over year. And that's not every year, but year over year, it's about 8%, 8.5%. Okay. Now think about that, because if you then take, I'm sure you've all heard of the rule of 72, right? Okay. Well, the rule of 72. So if you hold and you maintain and you're getting an 8% return year over year, that means that your portfolio should double, right? In how long? 9 years. Okay. That's at a flat 8%. Okay. Not to mention other things can happen. Now, if you're compounding and you're buying more stock at every dip, which is what we do, okay, you're probably compounding a little bit faster. So that kicks off the rule of 72 as well. Okay. So again, we go back to what this model is all about. It's all about the math. Okay. Very good. You're nailed it. Okay. So again, remember, it's about building wealth compounding. Okay. So how does hedging work? Hell if I know. Okay. We buy put options to protect the value of underlying stocks and sell call spreads to finance. Okay. We buy spreads on both sides. Okay. We sell and we buy. Okay. The put option acts as an insurance policy in a downturn. And again, we're going to use our back ratio spread, which you'll see an example of it. Okay. To create and take away the time decay issue of options, which if you know options, all you are familiar with. And we're going to sell iron condors, okay, for those times when the markets are doing nothing, okay? And they're going to create an average annual gain of between 6 and 8% automatic. And if you learn them and combine with the phases of the market, they can create as much as an additional 20% return, okay? When the market goes down, we cash in that insurance policy, buy more stock, and reinsure at a lower level, okay? So we're actually being our own actuaries and changing the rules based on math each and every time we can. Okay. Every time it's to our benefit, we're going to change the rules. Okay. And of course, that ensures our overall portfolio almost never goes down, especially in a bear market. In fact, our hedging model can bring back most portfolios grow in a bear market with the increased success of the call spreads. Okay. And again, it does what it's supposed to do. Okay. And that is what we're trying to get to you, okay, is to make sure that you learn the benefit. Okay? Because again, by protecting and buying more stock when it goes down, and again, we set different percentages, and I'll talk about those in a little bit, but again, it's a very base model. Okay. And you can make it more complex if you want, but I believe it's keep it simple. Okay. Now, why do you need protection? Well, you got emotions. Everybody's emotional. Okay. You have to learn to avoid that fear or panic selling. Have you ever done that before? You want to keep your long-term portfolio intact. Again, I will say this one more time. The only time you want to sell a stock is if the fundamentals have changed for the reason that you bought it. Okay. Now, I'm only a technical trader, but I do understand the fundamentals. And if the fundamentals have changed, that's when I would want to maybe make an adjustment. You want to create more yield, which is what we do. We're creating more yield, more ability to compound. Okay. Because there's too many miss the way that it's done now. Okay. And this is where advisors are weak as well, in my opinion. Again, I speak in my opinion. I'm not the gospel. I'm close, but not the gospel. But diversification, that's a bunch of bullshit. You don't need to be diversified. If you're hedged specifically. You have your own diversification by hedging it. Okay. Covered calls, worst strategy since since about 1995. It's the worst strategy. Okay. Because it's no protection, covered calls. Okay. You can lose your stock and you can lose your ass, but you're not going to make any extra money. Okay. Because there is no protection to the downside other than the small premium you collect. Gold and other precious metals, I'm going to say it again. Gold is nothing more than a hard asset commodity, which I'm a big owner of and I'm a big believer, but it's not going to protect my equity portfolio when the market's going down. In fact, more often than not, they'll go down together for a while. Okay. So, and please, if you're going to be in gold or silver or platinum, buy physical metals. Don't trade that paper crap. Okay. No good. Non-correlating assets, again, that's like the risk on, risk out trade, right? You know, risk on, risk out trade was created for a reason, right? Does anybody know the reason that risk on, risk out was created? Anybody? This is what I use for my this is what all my money is protected under. Yes. Yes, indeed. Okay. I know. I'm gonna show that. I got that in here, honey. Listen, at the end of the day, okay, risk on, risk off is created for the brokers, for the advisors, because they don't get paid if you're in cash. You have to be in the market. So how do they keep you in the market? Oh, it's time to go risk off. Got to move to the less. If they knew when to go risk on, risk off, they'd be geniuses. They'd never lose. Okay. Straight out put options, please. They go broke there too. Stop losses, you got no chance. Okay. Dividends, what's that going to do for you? If you yield 6%, okay, what's that going to do? Okay, stock goes on 40, yield goes up to 10. What'd you do for yourself? And hope and pray. Okay. Again, none of these are good alternatives. These are all losing strategies. Asset allocation doesn't matter. You could buy and hold one stock if you wanted and hedge it all. Okay, because with today's option world, you can hedge a stock individually by itself, right to itself. Okay. Now again, obviously, many of you own mutual funds, so you're gonna have to beta weight and create, which I have to do partially myself. Okay. But I'm going to show you. This is one of my portfolios. Okay, and this is synthetic. Okay, this is one of the things I teach as well. This is our IRA catch-up program or whatever. Okay, using synthetic stock. Okay, now this portfolio is a year old, as you can see. Okay, it started in August. Believe it or not, it was started on the last Friday of August in 2021. I was on Liz Clayman's show. Okay, and every time I go on, I got to give them stocks I want to buy. I said, Liz, I don't want to buy nothing. I said, I'm going to use the ETFs. Okay, that's all I'm trading right now. I'm going to buy the 3 ETFs, the SPY, the Q, and the IWM. Okay, and I put in 100,000. Okay, I've been hedging it for a year, and I did have to add one time 30,000. So basically, the portfolio is up 4%. Okay, in a year, the market's down, which you'll see. Okay, but it started out like this. Okay, I originally started with 500 each of synthetic stock, which I created. and actually started buying stock because that's what our model does. It starts to buy stock. Okay. And then it went from here to here. Okay. And I added in Win and Coin and Square. And then, now I had, if you can see, I had 6, 5, and 6. Now I got 9, 8, and 9, 2 and 1. And then it got to here. And this is where it is as of today. Okay. So now it's got Amazon, Coin, Google, IWM, Qs, Spiders, Square, IW, and Win. Now, the 3 ETFs started at 500 shares of synthetic stock, and now you can see the number yourself. And everything else started at 100, and you can see the quantities have grown substantially. Okay, so the portfolio is up 4%. Okay, in a year. Okay, with this is the market, and this is from this is when I started to where we are today in the spiders. Okay, so the market's down 15%. My portfolio is up 4%. And not only is my portfolio up 4%, but look at how much more stock I have. So if we get a bigger rally, look at how much more I'm going to make on the way back up. And I know at some point it's going on the way back up. In the meantime, I'll keep buying on the way down. Okay. And, you know, great day to be hedged. Thank you for all you do for us. Well, again, I try. Okay. Now this is from a member. Okay. This is she sends this to me every week. This is the 235th week. Okay. Of this buy. Okay. And it originally started with $100,000. Okay. Which was at the time was 367 shares. Okay. Now the 367 shares, unhedged shares, are worth not bad, 43%. Okay. And there was as high as 74%. However, that's still 367 shares. Now the hedge position has 1266 that has a worth of 473, which is up over 375%. Okay. The 3% SPY adjustment for the week is 398 on the anchor. SPY heads are below 386.06 and above 409. That's where we will roll up or down to either protect profits or buy more stock. Okay. And here is her equity curve. Okay. Obviously, the hedge is the blue line. Not bad. Okay. And I thank you, golfer, my friend, my pal, for doing it for me. Okay. Look, we've all seen and witnessed a correction. Okay. Here's a correction, 5, 10, 15. And again, this is about the average length. Look, nobody knows how long they're going to last. There's an average. They're using a number just like everything else. Okay. So again, I'm not going to drive into fear. I don't know if this is going to be it. Okay. I don't know if we're going to go back up again. And if I'm going to get hurt being short now. Okay. Because again, my trading business is short. My overall investing business is long. And I'm always long. Okay. So look, as I used to say when I was coaching, keep your head in the game. Okay. Keep a long-term perspective. You're in it for the long term. So if you're playing the statistical model of the markets that goes up 8.5% year over year, then you're on the right side. Don't panic. And look, if you ever want to sell, never sell out of panic. At least do me the favor, take a deep breath before you do anything. Okay. Never let tax considerations affect the strategy. Okay. And you cannot outsmart the market by timing trades. Okay. You're just a fool if you think you can. Okay. Trust me. I've lost 7 figures trying to be smarter than the market. Okay. So again, you think you're smarter, you get no shot. Okay. No one cares until it's too late, right? That's always the case. Nobody, the horse is out of the barn and ran down 3 miles. Now I'm going to put up a fence. Okay. Good idea, right? Look, again, I don't know when it's going to happen. I've lived through it. I've watched them. I've seen it. And here we go. So I teach the phases of the market. This is one of the things we use. This is how we get ourselves positioned. And I'm going to give you just a quick rundown on how it works. But again, I don't use any indicators. Okay. You can see all my lines here. These are different phases of the market taking place. Okay. And these are creating decisions for me. Okay. When I want to make a decision. But all markets are born out of consolidation. Okay. Which you can see down here at the bottom, we're consolidating. We're stuck between, 30,800 and 29.5. And suddenly you get a breakout. And actually, interestingly, it broke out and kind of hovered on that support line before actually taking off to the upside. So it kind of congested again. Okay. And it finally broke out. And then usually the market will end in what they call a blow off. But you have congestion, which is 65% of the time, and break out to a trend either up or down. Okay. Because it can be either way. You know, if you go back, you can see that we had a consolidation and a breakout to the downside and a downside trend. And the downside trend actually did end with a blow off to the downside. Okay, panic. Okay. So, but you use these that helps you create more credit to build more to protect your overall investment and create more yield for yourself. Okay, and this is something that we work very hard on in our classes. Okay, because again, this is what it's about: is bringing you to the best potential opportunity. Okay. And those are the different phases. But again, I use zero indicators. Why? Because there's my indicator. That tells me all I need to know. Okay. But congestion, break out of the trend, blow off. Beta weight your current holdings. Again, many of you, including me, and now, for example, my 401k can only be in mutual funds. Okay. I can't own individual stocks, so I have to weight those. But every mutual fund is weighted to an underlying index, whether it be the Dow, the S&P, or the Russell, or the NASDAQ. Now, for me, the Dow is worthless. Okay, the S&P and the Dow are the same, in my opinion. So it doesn't really matter. So I just use the S&P or the spiders. Okay, but you take a value. Okay, so let's say you come up with a value of, 100,000. Okay, so you would build a back ratio spread, and this is just the very basic part of it. You'd build a back ratio spread going out into December right now is where we're at. Okay, we use quarterly, we trade quarterly for these hedges. We roll them quarterly because we have found that even though we have the ability to go sooner, overall cost is cheaper by going longer in dates, and you still get the same advantages. Okay, so you get the timing and you go, oh, wow, that's a lot of money. Well, okay, well, it's 1,800 for every 39,000. So you want to look at the absolute certainty of math. Okay, I'm hedging 39,200 in this particular case. Okay, my cost is $1,802. I'm going to sell $100 a week in weekly premium, but again, so my cost to cover is 18 weeks. But again, that's not going to happen all the time. It's really just adding on enhanced yield. So my yield is going to be from 60 to 100%, just and higher, just depending on what's going on. Okay, and how it gets there. But over time, it will always be much bigger than the normal market or doing nothing. Okay, and your absolute protection comes in, and you figure it out by it's 392. We're hedged at 391 minus the 1,800. So we're basically hedged at 373. So my max risk at this point right now is 4.51%. Okay, and in that same period of time, there's an expectation of movement in the market of 13%. Okay, so I think I'm in pretty good shape. I think from an arbitrage standpoint, I'm also in pretty good shape. Okay, risk of 4.1%, 4.5, and again, that's absolute, and it can only get better. I can make more depending on what happens, how the markets work. Okay, depending on how the trade goes. Right, if you understand options, you know that different circumstances change, and we get wilder swings, and we get lesser swings, and again. In the meantime, we're also going to use our go-to number is when our stock goes down 3%. Okay, we're going to roll down. I'm talking about a bigger stock, but a 3% move down. I'm going to roll my hedge down, take the profit, and buy more stock. Okay, which means that every time these things, you see all these arrows, every time it breaks down, I'm looking to buy. Okay, because that's what we do. Smart people learn from everything and everyone. Average people from their experience. Stupid people already have all the answers. And again, I'm saying to you that you need to learn at worst to hold. If you don't become a member, at least to hold. Okay. Now we have automation as well. Okay. And this is a very big feature because if you go through Trade Your Brokerage, number one, it's only $10 a month for Trade Your, flat. Okay. And they can automate your hedging, okay, and do everything automatically for you, okay, from the back ratio that we use to the percentage you want to use or the percentage that we recommend. Okay, and it's $10 a month plus our licensing fee for the software, but you'll get a special surprise in a few minutes. In the meantime, this is one of my positions. You saw it in my portfolio. Here's a win yesterday. Okay, rolled down. Okay, and it rolled down to 57, 50, 55. I bought 15 more shares of stock. Excuse me. At 57.43. Okay, where's one trading today? No, I don't even look, to tell you the truth, honestly. And when it's trading at, it's 59. Making money. All right. Making bacon. So again, it takes the excess from the credit, it rehedges. I establish a new level of protection that's lower, but I bought more stock and accumulated so that I can be equipped to benefit from the next up move or the average up move over year over year. Okay. We buy when the market's on sale. Very good. And here's just another, sorry. Here's the one I want to show you, right? So here's a SPY roll. So I had accumulated so many shares that my hedge had to go from 13 by 26 to 14 by 28. And the software did it automatically for me. Okay. And these are all things you'll learn in class. Okay. But this is all done with automation. Now, everybody's got to learn how to do it first, though, because you have to be able to handle it on your own so you know what to expect. Okay. But from one of my members and one of my good buddies, you made the complicated and impossible understand and attainable. I can't thank you enough. You are truly amazing. Oh, thank you, my brother. Are you still here? Or did you run away already? A big part of living life you want is taking ownership of your choices now and in the future. Well, you're going to get a choice right now to change your life. Okay. And I always say, do something today that your future self will thank you for. And I've not yet to meet anybody whose future self ain't thanking them for hedging. Okay. In the meantime, I asked you about the two questions, and I hope they were both yes. Okay. One more big referral or whatever you call these things. The hedging software is amazing. My only complaint is, why didn't you start earlier? Just kidding. And Margaret, why didn't I start earlier? And you'll have that regret, I promise. Okay. So are you ready to take control? Okay. If you're not, don't join me. Again, look, I want happy people. B, I want to teach it, and I'm a tough coach. Okay, because I make sure that you learn it. Okay, so here's your offer. Okay, it's 8 weekly sessions we start with. Okay, you get 8. They're all recorded, so if you can't make it, they're Tuesday nights at 6 Eastern. Okay, they're usually about 90 minutes, except for the first one. Okay, everything is recorded. You get to keep the recordings for life. Okay, you get quarterly reviews. Because I'm not going to do this class again, I will, those who join and those who are already members, who I promised that I would never desert them, because things change. The classes evolve, things happen as markets change. You will get quarterly reviews. Okay, so you'll get a mini version. Okay, you will learn the IRA catch-up program. Okay, for those of you who are behind, okay, I have a way to get you. Now, that portfolio of mine I showed you, I would never let you do this at the beginning. But that portfolio of mine, the reason I had that cash to it is because I'm margined at 11 to 1 in that account. Okay. That was about $1.5 million worth of securities that I'm leveraging. Okay. But again, that's so I can show examples. But you get to learn this program. Okay. The specials for the last class. Okay. 1 year free of the software. Okay. You get 1 year free of the software. You get a $500 discount if you want to come to Las Vegas live or go on the live stream, because you've missed the early bird. So basically, this takes it back to the early bird prices. Okay. So if you want to join me and learn how to hedge, we're going to start on September 13th, which is a week from Tuesday. Okay. Learn how to hedge, compound your portfolio, protect, prosper, and relax. Teach all the tools you needed. Access the software that automates the hedging. BubbaTrading.com/hedge. It's normally $3,500. Today, it's $3,000. But if you take off the $1,200 worth of software value and the $500, you're buying the course for about $1,300. Okay, and I haven't sold it for $1,300 for about 10 years. Okay, so again, it's worth every penny of it. But if you don't see the value, hey, I can't help you. But it's BubbaTrading.com/hedge. And as always, I will answer any of your questions you have now. So please feel free to fire away and ask me anything you want to know. But it's BubbaTrading.com/hedge. Okay. So you can ask me anything that comes to your mind right now. I'm happy to answer. And it can be about anything. It can be about my love life if you want. Okay. Well, I thank you all for at least taking time on your busy Saturday to come and share with me. And it's always a pleasure. And, I do like teaching, but I am getting tired. I'm working on my golf game and it's getting pretty good, if I do say so myself. Okay. I'm not going to teach as much. I'm going to get more into, I don't have to work. So why am I working so hard? Okay. And now that I have 2 homes, one in Vegas and one in Chicago, I'm going to get out more and enjoy. Okay. So if you have any questions, great. And if not, bubbatrain.com/hedge. And again, this is it. You will not learn this again. And I assure you, you can scour the internet high and low. You will never find this. And just one quick note that every attorney will squelch, but there it is. My stuff is trademarked. Okay. Again, just in case everybody just say you can't do it. Well, I did it. There it is. That's a real trademark from the United States government. Okay. And it's been trademarked since 2016. Okay. So you can say whatever you want. Okay. But there it is. Okay. Oh, there's a question. All right, buddy. This was recorded. Yes, this is recorded. You can watch again later. It'll be sent out. It'll be sent out shortly. Okay. As soon as you process it, you have to, you get to come back for free. I told you, you didn't pay attention the first time. Yes, of course you get to come back. If you've been through the course, you can always come back. Okay. That's what I do. I want you to keep learning. Look, I'm on your team, kid. Okay. Even though we don't agree on everything, I want you to make money. Okay. No, I don't publish any of this stuff. But look, I'm going to teach it and I'm going to give you the recording, but I'm not letting anybody pirate my stuff. Okay. I know too much. Okay. And I know how to use it. And I'm not letting somebody else butcher my products by publishing. Okay. I have it in writing, but I wouldn't give it out. Okay. I won't even send out, I'll send out the recording. I would never send out the PowerPoints. Okay. No, yeah, you get to come. You all you do is log in. You get invited to every class. You have been since you took it, unless you ignored the emails. Okay. Yeah, golf's gonna be great. Listen, I've been playing. I've been taking lessons. I'm trying to redo my whole swing, which ought to be interesting in the first. Anyway, but so at the end of the day, like I said, this is it. I'm not teaching anymore. This is September 13th, and I got the countdown date. And then once a quarter, I will update because again, life changes and markets have some subtle changes or some big changes. So I always want to be prepared. But from an aggressive teaching standpoint, I don't want to do anymore. It's a lot of my time. It's a lot of nights. Okay. Because obviously I start at 1:30 in the morning by going to the health club every day at 1:30 a.m. Okay. So, but anyways, I appreciate all your time. Again, it's bubbatrain.com/hedge. I leave for Italy September 9th to 7th, 19th. Yes, you can participate 100%. It's going to be recorded, so you can catch up with the recording when you get back. Okay. And you can catch up on the sessions, and then you get to come to the quarterly reviews too. And so again, I'm telling you, if you don't take this class, shame on you. Anybody who's investing. And again, whether you do or not, it's not going to affect my life one way or the other. I do this because I want to help. Same reason my high school program is in high schools for free that I pay for myself. Okay, it costs me $50,000 a year. I take it back. A few of you have helped me on Patreon, so I want to thank all of you. But for the most part, it costs me $50,000 a year out of my own pocket to help educate. Okay, so again, I give you stuff that is real, that works. Okay, if you let it work for you. And that's what my goal is to be able to help all of you. Okay. Synthetic every week is what I do. Okay. Because it creates, it was a good one. I'm looking for you for my grade. Give me a grade. Weekly is better when you learn out about the 80-50 delta rule. Okay. The deltas click faster if you understand that. 101. Oh, baby. Anyways, bubbatrain.com/hedge. In the meantime, I appreciate your time. Have a great Labor Day weekend and enjoy. And if this is the last time I ever see you, then hey, good luck to you and good health. Okay. Be good. And thanks, everybody. Have a great day.